Hey, welcome back to Audit ABCs with Jess, where we turn audit standards into bite-sized fun. I'm Jess, your audit bestie, and today we're on a mission, cracking the code of ISA 315. This is the standard that helps us spot risks before they cause audit chaos. Ready to become an audit detective? Let's roll. ISA 315 is like your audit treasure map. It guides us to find and assess risks of material misstatement in a company's financial statements. Think of it as detective training. Before we test, we investigate. ISA 315 helps us look beyond the numbers to see what could go wrong, before it does. But here's the secret sauce. We always keep our detective hats on by using something called professional skepticism. That means we never just accept things at face value. We ask questions, look for clues, and stay alert for anything fishy. A risk of material misstatement is the chance that the financials could be wrong, not just by a little, but enough to mislead someone relying on those numbers. These risks can come from fraud, someone cooking the books, or error, someone making an honest mistake. And they can pop up in two places. The overall financial statement level, like if the whole pizza is a mess, and the assertion level, like specific toppings on a pizza. Is the cheese real? Is the pepperoni missing? Is the crust burnt? So, if the financials are a pizza, a statement level risk is the whole pizza being burnt. Assertion level risks? Just one slice is undercooked. Okay, so now that you briefly know what risks are, ISA 315 gives us a 5-step obstacle course for risk assessment. Ready for the adventure? Try to keep up. We will do a quick example at the end. First, we get the big picture. What does the company do? Who are its competitors? What's happening in the economy or industry? Big changes, new regulations, or wild market swings can all create risks. Next, we check the company's internal controls, like locked doors in a house. Are the controls just for show, or do they really work? And don't forget technology. Automated systems and IT changes can be both a superpower and a risk magnet. Now we piece together what could go wrong. Is there pressure to overstate revenue? Are stock levels realistic? Could a new IT system glitch mess up the numbers? We size up each risk. How likely is it, and how big could the impact be? This helps us decide where to focus our audit energy. Some risks are extra spicy, like management override of controls or complex estimates. These are significant risks and need special audit love, tailored procedures, extra documentation, and maybe even bringing in the audit superheroes. ISA 315 lists requirements to consider whether something is a significant risk, as well as a list of significant risk examples. Before we continue, please remember to like and subscribe if you find this helpful. Okay, so how do we hunt down these risks? With risk assessment procedures like inquiries, asking the team, what keeps you up at night? Analytical procedures, spotting weird trends or numbers that don't add up. Observation and inspection, watching how things are done for real, not just on paper. And remember, we always use professional skepticism, a questioning mind, alert for anything that doesn't quite fit the story. Here's a pro tip. Every step, every risk, every decision, we document it. Audit documentation is like our adventure journal. It shows what we did, what we found, and why we made our choices. If it's not written down, it didn't happen. Are you up for a practical example? Let's say we have two clients. Client A is an electronic wholesaler, and Client B is a furniture warehouse. Client A has huge December sales every year. Is it real or are they booking sales early? That's a cutoff risk. We need to dig deeper. Client B has inventory that's gathering dust. Could it be overvalued? That's a valuation risk. Time to check if it's worth what they say. In both cases, we use our risk assessment toolkit, professional skepticism, and documentation to make sure we're not fooled by appearances. Once we've mapped out the risks, we link them to our audit plan. That means more tests, deeper reviews, or choosing special procedures for the spicy risks. And we always ask, would this risk be material to users of the financials? If yes, it gets extra attention. So let's recap. I say 315 turns you into an audit detective. Always curious, always skeptical. Great audits start with great risk assessment and solid documentation. Don't forget technology and big industry changes. They can change the risk game fast. And always keep materiality in mind. Focus on what matters most. Remember, a smart audit is a safe audit. Keep learning, keep laughing, and keep auditing smart with Jess. That's all for today. Please like, subscribe, and share this with your audit squad. Remember not to miss our next episode, ISA 320, Materiality in Planning. Now that sounds familiar, right? Until next time on Audit ABCs with Jess.